In the past 24 hours, there's been a presidential proposal to replace estate tax reform with a simple elimination of the step-up in basis. Now, under its current form, without additional steps being taken under the code, the loss of a step-up in basis will result in a double tax, which is contrary to the spirit of the step-up in basis to begin with. Now, because of that spirit, there are some speculative things we can look at that might create the genesis for planning ideas with clients. We'll look at how there's things under the code, such as an income tax deduction for estate tax on income in respect of a decedent, or an extension of the step-up in basis for gift or GST tax paid out of pocket, which might apply to the estate tax with simple changes as well, or perhaps even a refresh of the limited step-up in basis from 2010. Those are all speculative ideas, but could life insurance also be leveraged as a source of liquidity for capital gains? I'm Griffin Bridgers, and this is 10 Minutes with Griffin. For today's episode 192, we're going to look at the loss of basis step-up and the potential for double taxation that could result from that. Now, as always, this presentation is not intended to substitute for legal or tax advice. It is provided for educational purposes only. And if you'd like a copy of these slides, please email me at griffin.bridgers@gmail.com. Now on to our discussion. In the last 24 hours, as I mentioned, the basis step-up elimination has gained traction as part of a more comprehensive reform to capital gains taxes. Because what the basis step-up does is it eliminates tax on capital gains and possibly tax on recapture as well that would otherwise be incurred by the heirs of a deceased person. Now, in theory, we have to analyze this based on the history and context under which the step-up in basis was originally conceived. Why? Because by its operation, it's designed to avoid double tax. What Congress intended to do was to either tax the estate or tax appreciation in the estate, but not both. So, traditionally, the big difference is that the step-up in basis for gift tax was conditioned on the payment of tax out of pocket, as we're going to see, but it never was for estate tax because the basic exclusion amount was so much lower. But we only find through the increase of this basic exclusion amount that we now are in an area of no tax, whether it be capital gain or estate tax, on up to the first 11.7 million of a taxable estate. That could even be more with a portability election in place. So the big question here is, how do we avoid double tax if that step-up in basis is lost? So I'm going to look at, I started off with two theories, but I'm really going to look at three based on existing code sections. One is income in respect of a decedent, which does not get a step-up in basis. But in order to avoid double tax on that, in the hands of the recipient, there is a miscellaneous income tax deduction for estate tax attributable to that IRD. So a natural question that I've posed in prior episodes is whether the loss of a step-up in basis could also maybe extend this deduction for capital gains that are incurred by an inheritor. And just as a spitballing example of how that might be calculated, you might compare the estate tax on just the basis of property to the estate tax on the basis plus capital gain to determine the amount of the estate tax generated by that appreciation, and that might generate a similar deduction as the one we get for estate tax on IRD. But if we're going that far, there's already an example like this for gift tax, because unlike transfers at death, gifts generally have a carryover basis, which would really be the rule for transfers at death if this is enacted. However, there is a step-up in basis for gift tax and even GST tax paid out of pocket, and it's based on the ratio of the gift tax paid to the appreciated portion of the taxable gift. So whatever gift tax was paid on the basis, there's no increase in basis for that, but whatever gift tax was attributable to the appreciated portion, there is a step up there. Now, we could see something similar apply in the estate tax world with a simple amendment of the code if the step up in basis goes away, and that may be easier than the IRD deduction in extending that. But we could also have a throwback to 2010, where estates could elect to apply a limited step-up in basis in exchange for a temporary repeal in the estate tax. That might apply in addition to the other two items I looked at, or as a substitute for them. And that's more speculative, but that could be a possibility. All these are really just easy fixes under the code to avoid this double tax problem, because I doubt this is what Congress wants to do, and if they do want to do this, that'll be a difficult row to hoe if you want to have both estate tax and capital gain apply to the same asset, because combined, especially with a higher capital gain rate, that's going to create 70-80% in effective tax. That could be very bad. That's going to be a hard pill to swallow for a lot of taxpayers. So while nothing in this presentation has actually been proposed or even reflected in current proposals, these are really existing principles we have that we can put into planning ideas, because it seems almost certain that if the step-up in basis does go away, there will be a corrective mechanism to avoid the double tax. And of course, we also have life insurance that, as long as it's excluded from estate tax, it's a very effective source of liquidity for capital gain events, which may increase if the step-up in basis goes away. So lots of theory here, very little substance, but it'll be an interesting next few weeks and months to see what might happen with the infrastructure bill. As always, if you have questions or topic suggestions, please email those to me at griffin.bridgers@gmail.com. As a reminder, I cannot answer client-specific questions, so please limit your questions to the topic itself. Thank you for joining me for this episode of 10 Minutes with Griffin, and I look forward to seeing you in the next one.